So I received a number of emails questioning how I caught the trade on STNE from people who are in the course. They don't understand it. So I figured I would just do a video rather than answer each person individually. I figured it would be easier just to put out a video that explains how the trade was handled. So, and this is how we handle every trade in the private feed, in the advanced chat. So when we get an idea that's exceptional, we look for the technicals to line up our layers, just like the class teaches, for an entry. So let's talk about how we found our layers. To begin with, there was this move down that's a channel down, and you get this spike here that looks like it could be a left shoulder, could be. And price comes to it. Look at in this area. Look where my vertical line is showing that price was on that ledge but didn't hit the yellow dotted line. That alert was not firing and going off. But we knew we were in the right shoulder inverse entry zone. So as I type up here, you can see what the plan was. We have a right shoulder inverse entry zone. We know that it's there, potentially, but that's not enough to take a trade. And you then see that the daily does a 2B or a double bottom. And you can see it on the vertical line on this low, and you can see it on the vertical line on this low. So you've got two lows that are a double bottom above the right shoulder. You also have the yellow angled line that's moving down right here, and that's a BSL, and that hits at the second bottom. And you also have a virgin mid. The high of this bar, right where the higher yellow dotted line is called a virgin mid. It's the center of the prior turn, the lowest high inside. And price hit and held that as well. So here's how you get to a layered trade. You get, just where my cross is here pointing to, a BSL hit plus the virgin mid plus the right shoulder inverse level, which is lower. And then you need a trigger to get into the position, which the double bottom that it did, the daily 2B right above written, was a trigger. That's a valid trigger. So you wanted to be, the plan was to be as close to about 20.95 as possible. Actually, it was anywhere from that right around 21 down to that left shoulder price. Because if you think about it, the real left shoulder was 19.95. So you knew that in that area, you had to place your stop lower. I even wrote it here. Hide stops under right shoulder 1980 area. So you're basically trying to get in that 21 spot with a stop just under that $20 mark, which hides under the right shoulder. It's not the smallest stop that you can use in the world. It's certainly, I would have even liked to have had more shares by having a tighter entry area. But in this case, if you notice the price action here, it was a bear flag type behavior in that zone. For several days after I entered the stock, it had done nothing. And me, I should say, and the group in the private feed, and even myself, felt, this is a dog, it's just kind of sitting there. What are we supposed to do? It stinks, but we got to follow our plan. Remember, that's always the outcome and the result of when we go to handle trades. Well, we got to follow our plan. No, it's not acting great. No, it's just resting on the low. No, it didn't bounce off the 2B and fly higher. But what do? You're stuck. Once you entered that trade, you were stuck. And the reason you're stuck is because unless the right shoulder area of this left shoulder area line fails, you're in the trade already. And unless that fails, it's a long. And so, of course, there'll be some people that will break rules and don't follow a plan, and they would kill it. And there were some that did. And then they miss out on the run. But once I had made that entry, regardless that it went sideways for 4 days and did nothing afterwards, I was trapped. Trapped between an entry, which didn't stop out, and targets that were much higher. Now, a few days later, as you can see what happened, the stock on this day, right here, gapped up higher, pulled back, and held at the FGF, it's called. I haven't, in the private feed, that term may be used, but I'll say what it is the full gap fill. Price pulled down into the exact area where the prior close was. That is a full gap fill. See, some people think a gap fill is when the window looks like it's closed, the top of the bar. But the real gap fill is where you close up all of the window that started from the prior close all the way to where you gap to. And that's a very important hidden pivot in the market. People don't know it, but it's an important hidden pivot. And so price pulled all the way back down on this bar, right to the FGF, right to the full gap fill where it closed the prior day. I know it gapped much higher, and I know somebody was thinking, oh, this stinks, it's going straight down, but it just filled the entire gap from the prior the prior close, and then it proceeded to follow through. And so now, again, you're trapped. You have no job to do. You can go for a walk. You can do everything you can to avoid touching anything. Your job at that point is to step away from the keyboard and let the trade work, because math is the holy grail. And so if that area, let's just say for round number's sake, because it's easier to explain it, but let's say that stop was $1. Well, 5 to 1 would mean I need a $5 move to the upside before I can even touch the trade to take any money in profits. And so that's what happened. You watch it in here, near $21, where we entered, and you go to yourself, he needed more than $5. He needed like $6 with the little wider stop because of the right shoulder inverse. And so you watch it climb up and you get $6 ahead of that area, and you go, okay, I can make my first scale here. And while I have different scale plans, generally one thing I would tell people is you can scale 60% here, 70%, and you've done a phenomenal job. The market you have a massive edge, and you move the remaining stop up to break even. And now you manage it by looking and seeing what reversal clues you get in the market. Clearly, if you had a massive reversal, you would reduce further. And so you'll see here that price continues to go up beautifully. It crosses over the highs. This is a brand new high. And notice what price does. Puts in a naked bar top. No trading to the left of this bar, no trading to the right of this bar. Totally exposed outside. This is a signal that there are sellers here into the highs, and so I knew it was going to pull back. I reduced a little bit more, and then I said, I don't have to reduce anymore. I'm out here. I've got plenty of profits, and the rest I'm going to leave as runners. And so depending on what percentage you scale, and again, there are different scale plans, but you now sit in the position and now you wait. You got a pullback here, you got a nice reversal down here, and then a bull flag, see it? Up, sideways flagging, breaks this downtrend line here. I don't have it drawn in, but I guess I can do it for the sake of showing. You can see the downtrend line break there, off this flag, and then you rip higher after earnings, and gorgeous. Now, I know a lot of people have asked me from the main chat that are taking the course, Randy, why are you not bullish up here the same way as others are? And it's pretty simple. Let me show you. First of all, that's a TRL. I don't want to buy up there. That's the first problem. Yes, I do see there is some horizontal support on the stock. I do. I see a little bit of horizontal support that's being developed right in here. So you can see that it's holding some support right on that $40 mark. I even said to people in chat, you're going to take a long, you can try someone at near the $40 mark with a $2 stop. And I was right. It went up 10%. It went up $4, but then it fell back down and hit it again. So yes, $40 is holding, and that's fine. And that's the reason why I still have 25% of my position, and I'm not freaking out. And even if it broke that level, I probably would keep some just because I have such a huge cushion. Remember, this is a 100% plus move here. But realistically, right now is harder to trade. For all I know, the stock is going to come all the way back to this full gap fill, right down here at $34. But that seems extreme for this circumstance based on price action. For what is more realistic, maybe it creates a channel here, and let's clone that, and maybe it's something like this and pulls back and creates a channel or something toward the lower end near support, and it holds or creates a double bottom, and then maybe it sets up a new idea to trade here. But realistically, there just hasn't been much to do right now on the trade. Now, again, all of this, I know you're saying, well, Randy, this is all in hindsight. No, this was all done live. I didn't tell the main chat about the trade down in here. I just didn't. I told them about here when we were up about $3 on the trade, and it was coming into resistance. Most of them are breakout traders, and they want to buy strength. So I figured they would try to pick it up right in here. As you know, I bought down into here. Why? Because this area had a much greater odds of failing than this area with the right shoulder. Now, if you took 100 of those, you'd find the fail rate is much higher than the success rate. Down here, the success rate is actually much higher. It's because of psychology, partly with traders. Traders think that buying strength should be the easiest thing, and often it's harder unless the market is aligned, the sector is aligned, the stock is aligned. Just as O'Neill taught everyone early in his days, he figured out that it was an entire formula to get leading stocks to move, because many of them would wipe you out before they ran. So this is just a good example of seeing how a trade develops. And for those of you who asked, this is exactly how this entry came to be. At this point, I would probably back off the stock a little bit and wait for it to set up a little further.